All right. Hello, everyone. Welcome, welcome. Thank you for joining us. So before we get started, as people are trickling in, please tell us where you are joining us from. All right, we have Chicago, PA. Hello from Qatar. Columbus, Ohio. Washington, D.C., Dallas, Texas, the Bronx. Someone says, Andi, I love your hair. Andi always has fun here.
Thank you so much.
All right, I'm gonna wait another minute or two. So while we're here, before we get started, also please let us know, what industry are you in, or what type of business do you have? All right, we have computer graphics, home decor, wholesale and retail, illustration, writing and education, fashion, skincare, photography, art toys, video production, digital marketing, graphic design, illustration, fashion and textile, beauty, nails. All right, so we have quite a wide range of business owners here, which is always great to see. The great thing about tonight's webinar is you will all definitely benefit from the content. So, all right, let's get started. All right, so hello again, everyone. I'm Carly Ann with Parsons Entrepreneur Academy. Thank you for joining us for our monthly office hour series. Here on our platform, we invite successful and inspiring entrepreneurs and leaders to share their stories and the lessons they've learned along the way. For anyone joining us for the first time, Parsons Entrepreneur Academy is a platform that empowers creative entrepreneurs like yourself to build sustainable businesses around your art. And we achieve this through our 3 pillars that include mentoring, training, and community. You can visit parsonsentrepreneur.com to learn more about our platform. All right, so about today's webinar. So today, you are going to learn about self-employed taxes and all of the things creatives should know. It's going to be delivered by Andi Smiles, one of our amazing course authors. So Andi actually worked with us on our course, How to Manage Your Money and Create a Budget. And toward the end of the webinar, or after Andi is done delivering her content, we will actually be providing you with a special code to receive 40% off of Andi's course. So please stick around and stay tuned for that. Also, as a special bonus, if you look in the chat right now, we are going to be providing you with a link to your very own tax deduction cheat sheet. So please look out for that in the chat right now. Click on it and download it. So for the format of tonight's webinar, Andi is going to be presenting for approximately 50 to 60 minutes. Then she will be, sometimes she'll take questions throughout the webinar if it pertains to a section that she just went through. If it's regarding something in the broader sense, she'll save that till the end, where we'll have a special 15 to 20 minutes dedicated to Q&A. Also about the Q&A, please do not put your questions in the chat area. If you look at the bottom of your Zoom window, you'll see a Q&A box or Q&A section. You can click on that, submit your questions there. Only the questions in the Q&A box will be addressed. You can also upvote questions. So if someone asks a question that you're also interested in hearing the answer to, vote for it. The upvoted questions will be answered first, and we'll take the questions in that order. So now I'd like to introduce our webinar instructor, Andi Smiles. As mentioned, she's one of our amazing course authors, and we're so lucky to have her in our ecosystem. So a little bit about Andi. So Andi is a small business financial consultant and coach. She teaches self-employed folks to take control of their finances so they can step into their personal power. She's helped hundreds of self-employed folks organize and understand their business finances while also uncovering their emotional relationship with money. So now, on that note, I'll hand it over to Andi.
Hey, everybody. Thanks so much for joining me to talk about taxes. I hope you all are as excited as I am to talk all about self-employed taxes. I am going to hop into the presentation in just one moment, but I do want to, welcome you. So I live in California. It's so amazing that we can deliver this over Zoom and, get to chat virtually and connect all around the world. But because I live in California, I do want to acknowledge that I live on occupied Ohlone land. The Ohlone people are the original stewards of the land that I live on, and I want to express my gratitude for being able to live on their land. Okay, so let's hop in to the content. All right, so if you are here for Self-Employed Taxes 101, what every creative should know, you are in the right place. So Carly Ann already did a wonderful introduction for me, but I will just give you a little bit more about myself. My name is Andi Smiles. I use she, her pronouns, and I am a small business financial consultant. I'm a certified professional coach, and I am a course instructor for the Parsons Entrepreneur Academy. So I've worked in this industry for about 11 years. I've worked with all sorts of types of business owners. So everything from the small but mighty, like individual self-employed person, all the way up to retail shops with employees, hair salons with employees, coaches, consultants, course creators, graphic designers, all sorts of folks. So I've really been in this industry for a long time. And one of the things that I think is wonderful about working across many different industries, many different sizes of business, is that a lot of what I'm going to talk about today are the foundations of doing your taxes as a self-employed person. So it's going to apply whether or not you're a graphic designer or you're a content creator or you're somebody who's more in like the retail space. A lot of what we're going to talk about today can be applied to many different types of businesses because they're really best practices for doing your taxes. So one thing I do want to call out is this is not a workshop about how to file your taxes. So in other words, we're not going to be going step by step, like what you would put into your like TurboTax, for example. So we're not going to go in and do like, okay, like here's TurboTax, you're going to enter this line and this line. Instead, we're going to talk about what you need to do for your finances in order to get your finances ready to either DIY your taxes or hand them off to a tax preparer, and all the things you need to have tracked and updated. At the end, we'll also talk about making that decision about if you're going to DIY your taxes or if you're going to hire somebody. But I just want to call out right now, if you're expecting me to do like a live demo of TurboTax, that is not what we're going to do today. Also, as Carly Ann mentioned, please put your questions in the Q&A. It's really hard to track questions when they're in the chat and the Q&A. And so basically my boundary around that is to only answer questions that go into the Q&A. So if you have a question you want me to answer at the end during our live Q&A, please put them there. Okay, so let's talk about self-employed tax basics. Okay, so before we get into what you need to do for your taxes, it's really important that you understand how you're taxed. So here are the basics. Oops. Sole proprietors, LLCs, partnerships, and S-corps are all what we call pass-through entities. And I swear this is important, and it's all going to make sense later why you need to know this. Going to my next slide. And when you're a pass-through entity, what this means is that the profits from the company are passed on to the owner. So instead of something like a C Corp, where the entity itself is going to pay taxes at a corporate tax level on its profits. So in a way, you can think of it as like that entity kind of like owns the tax liability of those profits. When you're what we call a pass-through entity, those profits gets passed on to your tax return. And then the owner, which is you, the owner of your business, is going to pay income tax on the business profits on your personal or individual tax return. So here is a visual of how this is going to look in real life. So woohoo, your business made a profit. And a reminder, profit is revenue, so the money that you earn from selling your products or services minus your tax deductions. What's left is what we call net income. If it's a positive number, that means it's profit. If it's a negative number, it's called a loss. So you're only taxed on your business profits, right? So if your business didn't make any money, there's nothing to tax you on, right? But regardless, your business's taxable profit is going to pass through to your tax return. So to you, the owner, and onto your tax return. And then you're being taxed at that level. Now, this is the really important part because I see this happen a lot with people where they think that if they keep money in their business, it's actually going to reduce their tax liability. And that's not true unless you're a C Corp. So unless you're a C Corp, what you draw out of your business doesn't equal the profits or what you're taxed on. So in other words, if your business makes $100,000 in profit and you're like, well, I don't need all that money, so I'm going to keep 50 of it in the business and I'm only going to take 50 of it personally for myself. When tax time comes around, you are still going to be taxed on that $100,000 because remember, we set this up. You are a pass-through entity. And as a pass-through entity, all of that profit, regardless of what you do with it, which bank account it's in, is passing on to your owner tax return. So if you are holding back on drawing money out of your business because you think it's going to help you from a tax perspective, it's not, right? And also, if you've been calculating or kind of trying to figure out like how much taxes am I going to owe next year, and you're basing that on what you took out of the business, just keep in mind that you're taxed on the total profits. And what you take out, that's not the profit. The profit is what you earn minus your expenses. If it's a positive number, that's profit. Okay, so again, let's look at this again. So I've said this a few times, but no shame, no judgment, nothing, but people often get this number revenue confused with this number profit, which is why I'm like drilling this in so much, because I see this happen so much where people start to look at this top line number revenue as what they think profit is. So profit, your total revenue. So if you make $100,000 from selling your goods and services, this is just the money that you make from that that's coming in. Nothing's been taken out of it yet. Then we subtract our tax deductions. So it would be, let's say it's $40,000. What's left in this example is $60,000, right? So in this example, this is what you're going to be taxed on. Now, let's look at this when we talk about the owner pay piece of it. So we already talked about you have your revenue, we have your tax deductions, and you have your profit. But let's say that then you pay yourself $40,000. So you're like, okay, I'm going to personally live off of $40,000. I'm going to keep $20,000 in my business bank account, right? That's what's staying in the business. This is the number. The 60,000 is what you're paying taxed on, not the 40,000, not the 20,000 left in your business, the 60,000. So this is kind of like the foundation of how you're taxed when you're self-employed and what exactly you're paying taxes on. It's this profit number. Okay, now that we know what you get taxed on, let's talk about the types of taxes you're going to pay as a self-employed creative. Okay, so first, you are going to pay self-employment tax. Now, self-employment tax is 15.3% of most of your profits. And self-employment tax can also be thought of as Social Security and Medicare taxes. So of this 15.3%, 2.9% is you paying into your Medicare, and 12.4% is you paying into your Social Security. So we call it self-employment tax. It's that whole 15.3 together. But what you're doing here is you're actually paying into your Social Security and your Medicare when you're paying self-employment tax. Now, if you've been self-employed for a few years, or if you're newly self-employed and just heard everybody warn you that taxes are extremely expensive, here is why. As an employee, you do pay something that is called payroll tax. And payroll tax is the same thing as self-employment tax. It is 15.3%, and it is paying into your Social Security and your Medicare. But there is one major difference when you are an employee versus when you're self-employed. When you're an employee, your employer is required to foot half of that bill. So your employer is required to pay 50% of your Social Security and Medicare taxes, which are 7.65%. And then you as the employee pay the other half, which is deducted from your paycheck. But when you are self-employed, you pay the whole piece of the pie, right? So we're going from if you're going from being an employee to self-employed, you're going from only having to deal with half of that, right, to the whole shebang. And this is why it can often feel really shocking when you get your first tax bill, because a lot of people, when they go from being an employee to self-employed, they're like, well, this is what my employee taxes were, and like this is about what I was earning, and I'm making about the same amount, so my taxes will probably be about this amount. But they don't know that there's that whole other half that they are now responsible for. So that's self-employed employment tax. So that's tax number one that you're going to pay when you're self-employed. Tax number two is income tax. Now, income tax is something that pretty much anyone who's earning income in the United States is going to pay. So it's not like something that's just special to self-employed people. It's something that, employees pay as well. And income tax is based on your business taxable profits. Remember, that has like passed down to you. So now this becomes your personal taxable income, plus any other earned income that you have. So if you are doing your business as a side hustle and you have a W-2 job, that's going to be added in. If you're filing jointly with a partner and they're making income, that's going to be added in. If you have two self-employed gigs, both those profits are going to be added in. Then you take all that money that you've made, you subtract your personal adjustments. This is stuff like student loan interest, right? All these like random personal adjustments that we get based on your tax situation. And then you subtract your standard deduction, which is the deduction that everyone gets for just existing as a person. Or if you itemize your deductions, you subtract that. And what's left is what we consider your personal taxable income. And this is what you are going to pay income tax on. Now, income tax is interesting because it's based on your tax bracket. So the US tax brackets go from 0 to 37%. and everyone falls into one of the tax brackets. But you don't pay the same percentage on all the money you earn. It basically does something that tiers up. So for the first chunk of money, you're going to pay like 10%. For the second chunk of money you earn, you're going to pay another 15%. The next chunk you might pay 22%, and so on and so forth. So don't get scared if you hear that your tax bracket is 24%. You're not paying 24% across the board. You're actually paying much less. And that's what you'll hear people say is their average tax rate. So a lot of people, my tax bracket is 24%, but my average tax rate, when I take into account this tiering up, is something more like 16%. But here is what you are paying when you are self-employed. You are paying both your self-employed tax and income tax together. So you're paying two taxes when you're self-employed. And when you get that annual tax bill at the end of the year, this is what's on it. And again, the income tax, you would have had to have that anyway, regardless if you're self-employed or not. The self-employment tax is really going to be the thing that's driving up that tax bill. Okay, so I know this sounds all very scary and like, oh my gosh, she just told me I'm gonna have to pay all these taxes, but don't worry, because now we're gonna talk a lot about tax deductions, things you can do when you're prepping your taxes to help lower this tax bill, okay? So let's talk about tax deductions because they are like my favorite thing in the world. You all have this amazing tax deduction cheat sheet that you're gonna be able to reference. So why are tax deductions the best? Well, here is how tax deductions work. Reminder, you're taxed on your profits. And tax deductions lower your overall net income, and in turn, they lower your overall tax bill. Here's what this looks like. You have your total revenue, which is $100,000 in this example. We have our tax deductions, which are $40,000. And then we have our profits, which are $60,000. This $40,000 is lowering your overall profit. Remember, you're paying 15.3% self-employment tax on your profits. So if you lower your profits, you are lowering your tax bill, right? Because if we had zero tax deductions, your profits would be $100,000. Right? And that means you'd be paying 15.3% on $100,000 versus in this example, we have a lovely amount of $40,000 in tax deductions. That's lowering our overall tax bill. So tax deductions are extremely important to managing your self-employed tax bill. Okay, so how do you know what your tax deductions are? You're like, okay, these sound great. I want more of these, and you should want more of them because they really do help you. So how do you know what tax deductions are? Well, tax deductions as defined by the IRS are ordinary expenses and necessary expenses. So let's talk about what ordinary means. Ordinary are expenses that are common for businesses, right? So they're basically expenses that pretty much all businesses are going to incur. A great example of this is advertising, right? You don't need to like make a strong justification for why advertising is expensive, right? Advertising is something that virtually every business does. And if you think, well, I don't run ads, I don't pay for ads. If you have a website, that is a form of advertising, right? Bank fees, travel, office expenses, these are all the types of expenses that are very, very normal for people to have in business. And we kind of think of these as ordinary. Necessary expenses are expenses that are helpful for you to run your business. And the reason you is capitalized on this slide is because everybody's business is different. So what's necessary for you will be very different than what's necessary for me. I always use this example. My best friend, believe it or not, is a tattoo artist, if you can believe, as I sit here very tattooed. And my friend's tax deductions are very, very different than mine because my friend can write off things like, of course, tattooing supplies like needles, inks, paper towels, all that good stuff. But they can also write off things like art reference books because that is important for them as a tattoo artist. For me as a a small business financial consultant, I can't really write off books about, art or art deco windows or whatever interesting things my friend has in their library, because it's not indispensable or helpful for my business. So necessary really gets down to that industry level of your business. Now, here is an important thing to know. It does not need to be indispensable to count. So often people are like, well, technically, I'll use my friend as an example. Technically, I don't need this art book to run my business. I need the tattoo needles, I need the ink, I need the paper towels, but I don't need the art book. So is it still a write-off? And the answer is yes, because the definition is, it helpful for your business? Is it going to help you run your business? It doesn't have to be indispensable, but there has to be some positive benefit that it would have on your business. And in this case, I'm doing a tattoo for somebody on art deco design, and I need references because I need to, draw up this whole thing. Okay, so tax deductions are necessary and ordinary. And really, if you can only do one thing to help you lower your tax bill, it's going to be learning your tax deductions. This is the thing that is going to have the biggest impact on lowering your tax bill. And that's why this webinar comes with your tax deduction cheat sheet. Because if you can do nothing else, I recommend that you go through that cheat sheet and you look through it and you circle or highlight all the deductions that pertain to your business. Because remember, your business is going to be very different than somebody else's business. So some things on that sheet, you may be like, I don't do that. Like, I don't do equipment rental. Other things on that sheet, like advertising and having a website, you're going to say, oh yeah, I do that. So if you want to do one tangible thing today to help you with your taxes, it's to download that sheet that they have in the chat. Go take 5 minutes and circle the ones that pertain to your business. That is going to help you as your business grows. Okay, so let's talk about preparing your taxes. So we know what you're taxed on, we know how you're taxed, we know why you want to be really, really clear on your tax deductions, and you're going to see more of that come through as we talk about preparing your taxes. But what do you actually need to do to get yourself ready for filing your self-employed taxes? Well, the very, very, very first thing you need to do when you're filing your self-employed taxes is what we call your bookkeeping closeout. And basically, in a nutshell, that means finishing up your bookkeeping for that tax year. So here's what finishing up your bookkeeping looks like. It means recording and assigning categories to all your business transactions. This is your income and your expenses, because on your taxes, you are going to tell the IRS, this is how much money I earned. So that's the income side of recording that. This is how much money I spent. That's recording the expenses. And these are the categories I spent my money on, because it's not enough for the IRS to just know that you spent $40,000 in a year. They want a high-level view of what you spent your money on. So this part about assigning categories is very important, because you need to do that for your taxes. So first, you're just going to finish up. If you're behind, all good. I, for many years, used to do my bookkeeping the day before taxes were due. It was a nightmare. I don't recommend that to anybody, but no shame if that's your situation, because it happens. But you're going to finish up your bookkeeping for, let's say, 2021. Then you're going to address questions, because usually what will happen as you're doing your bookkeeping and going through your bank statements and recording your transactions is you're going to be like, wait, is this really a tax deduction? Or, uh-oh, that was a mistake. Or I don't really know how to handle that. So first, just get it all down, record it all, make sure it's all there, and then save the questions to the end so you don't kind of like spiral into like a Google search hole. So you finish it, go back to your questions, address all your questions, and then ensure that you have your cash expenses entered in. So this is something people miss a lot. Honestly, because we've been in pandemic years, people have been buying stuff out and about less, but it's still something to be aware of, that you want to make sure that you enter in all your cash expenses. And if you are a product-based business, then you will need to do a year-end inventory count as well. And then you're going to make any year-end adjustments or have an accountant help you. So This is like what needs to happen before you move forward with doing your taxes. You want to make sure that you have all your income and expenses recorded, you've addressed your expenses, you addressed your questions, and you know what your end of year inventory is. Okay, so here are some tips if you're behind on the bookkeeping side. Gather your materials first. So get all your bank statements, get everything before you start so you don't waste time like logging into places. Choose a tracking method that's easy to use. I get this question a lot when people are behind on their bookkeeping for the previous year and they're like, wait, so should I like get in QuickBooks? Like, how should I do this? I'm like, you got to do the thing that you can execute the most quickly if you're trying to just catch up your bookkeeping. Usually that's a spreadsheet unless you use QuickBooks or Xero or Wave, which are all accounting programs in a previous life. And maybe you're like really familiar with them, so you know it's faster for you. But generally speaking, when you're doing this like large catch up or trying to like do last year's bookkeeping, you want to pick something that's going to be really easy for you to execute and use. We talked about this, highlight questions and answer them later. Don't get stuck trying to research stuff while you're doing your recording. Trust me, you just will spiral out into like Google or Facebook. Like I'm gonna ask my friends on Facebook and now I'm like doing something else on Facebook. Just really stay focused and save questions to the end. And then work in batches. So do like all of your checking account first, then do all your credit card accounts, then do all your PayPal or your Venmo or whatever you're using. Work in large batches. It's going to reduce that need to log into a lot of different places and it's going to keep you on track. Okay, so bookkeeping closeout. Part of bookkeeping closeout is, and this is kind of like a bonus part. My career started as a bookkeeper, so it pains me to say this. But the reality is this really is a best practice that everyone should be doing, but a lot of people don't do it. So if you can't do it, okay, but you have to do the first part. You have to do the first slides that I just showed you. This is like, please try to do it, but don't beat yourself up if you don't, okay? Reconcile your accounts. This is basically the process of ensuring that what you recorded in whatever method you're using to do your bookkeeping matches your bank statement. So if you're worried about your numbers not being accurate, if you're worried that you've missed something, the reconciliation process is what is going to ensure that you have not. And really, it's quite simple. You get your bank statements, and then if you're using a spreadsheet, you just go through month by month and check your bank statements against what you have recorded and make sure that the numbers match. If you're using a digital accounting program, there's a more formal process. But in an ideal world, you would also reconcile your accounts, because when you do this, what you're confirming is that what you recorded actually happened in the amounts that happened. That's the confirmation that you're doing. So you at least can trust those numbers that you're handing off later. Okay, so you're probably like, this is so much work I have to do right now. Oh my gosh. So here is how to make next year less horrible. One, use an automated bookkeeping system. It really does speed up the work. So maybe you catch up yourself in a spreadsheet, but then maybe you move into something like QuickBooks this year to help with the automation side of this and to take some of the work burden off of you. Do your bookkeeping one time a week or at least once a month. And then reconcile your accounts monthly. So basically try to keep up with this on a more regular basis. Okay, so step 2 of your tax prep. You've got all your transactions there. Now, and this is especially for those of you that are in accounting programs, you are going to run reports. You are going to run a profits and loss statement, or if you just have like a spreadsheet, you're going to total all of your deduction categories, and then you're going to review your numbers. Okay, this is important. A lot of people don't do this, but before you go to TurboTax or hand this off to a tax person, look over your numbers and make sure everything makes sense. Like if you only pay $1,000 in rent a month and your rent line item is like $36,000, there's a problem, right? Just be like, trust that you know your business and just make sure that everything makes sense before you hand it off. I cannot tell you how many times people haven't done this. And then I've reviewed their reports and been like, this looks off to me. And they're like, that is totally off. That can't be true. You know your business, you know what should be true. Trust that and investigate things that don't look right to you. This, again, we're getting into like the bonus stuff. So bare minimum, please try to just review your numbers before you hand them off to a tax person or start entering stuff into TurboTax. If you want to be even more sort of like on top of the numbers, you can run a profit and loss detail or a transaction report, or just review your numbers in the spreadsheet that you have. And really, it's a scan. This should take no more than 15 minutes. I used to do this for years for all my clients. You just scan through, and all you're looking at is, does everything look right? And things will jump out to you. And you're looking at category and transaction, Amazon, office supplies. That makes sense. But if we have Amazon contractor, you know there's something up. So it's a very quick scan to just ensure that you've really categorized everything correctly. And if anything is not categorized correctly, you're going to adjust it. Then the very last step is you're going to make, so once you know everything's correct and you feel good about it, you're just going to make that finalized profit and loss statement, or just finalize your spreadsheet and say, this is it. And then what you're going to do is you're going to save it in like a tax folder and give it to your preparer, or save it and have everything in one place when you open up TurboTax. Trust me, you want to have things ready if you're going to DIY this, so you can just very easily be like, this is my profit and loss. This is what TurboTax is asking me. So how do we make next year less horrible? Well, do this once a month. Every month, run or make a profit and loss and review it. Not only will this make your taxes better, but this is also going to make you better at running your business, because you're going to have financial transparency with your business, and you're going to get to really, really get to know your business. I have a whole module in my course with Parsons, which is all about like talking to your business through your money. And it's all about like how you use this report to analyze your business. And so when you're doing this regularly and on a monthly basis, you're going to get stronger at that, and you're going to catch stuff as it's happening. And then at the same time, just quickly scan your transactions every month and just do a quick like, yep, this all makes sense, or no, I need to look into that. It's so much easier to do it in real time than to go back 8 months and try to investigate things that you like semi-remember. Okay, so that is like basic. Like if you're like, I can only do 2 things to get my taxes together, I don't have time for a lot of other stuff. Those are the 2 things. So those are the things that are like, do those things and you will be more or less good. But what if you want to put a little bit more time into your taxes? What if you want to put a little bit more energy, right? How do you save even more on your taxes? So these are also going to be some more like advanced things that you can do for your self-employed taxes. Okay, the auto deduction. There is the standard mileage deduction. This is usually what people take. This is the easiest method for you to write off your car. So people are always like, how do I write off my car? And what's going to happen is you're going to take the deduction based on the IRS's rate. So the IRS makes every year a rate that it thinks that our miles were worth last year. So the 2021 rate was 56 cents per mile. And this is how it works. You're going to track your business mileage, and then you're going to multiply your business mileage by the mileage reimbursement rate, and that is your tax deduction. So the thing you need to know if you want to write off your car and your miles is how much you drove for your business, right? What are your business miles? That's the piece that you're going to have to do the tracking work around, which is why I'm kind of like, you know, step 1 and 2, you really absolutely should do bare minimum. But as we get into these other steps, there's more work involved for you. There's more tracking, there's more investigation. You may not have time for it, but if you do, it can really add up. Here's an example of somebody who drove 1,000 miles for their business, and they get a $560 tax deduction. That's a good deduction, right? So if you drive a lot for your business, you probably want to consider like doing that little bit of extra work, going back and figuring out what those business miles were. Now let's talk about what actually counts as business mileage, because there's definitely some confusion about this. Any miles driven for business purposes that are not from your home to your personal place of business. So if you have like an office that is your personal place of business, you cannot write off or count the miles that are from your home to that place because that's considered commuting. But you can write off client visits, business meetings, workshops and trainings. So driving to a workshop, driving to do errands, like going to the bank, going to the post office, going, to buy stuff from Office Max, and even driving to the airport or to and from the airport, right? All of those you can write off. Now, if you work from home and your home is your principal place of business, then basically anywhere you drive that has a business purpose, right? It always has this business driving, you will be able to count as business mileage. Okay, so here is how you can quickly deal with your mileage for last year. You're going to need to create a mileage log with the following information: the date of the trip, the purpose of the trip, and the total miles driven, right? So basically the IRS wants to know, when did you drive, why did you drive, and how much did you drive? You can do this very easily in a spreadsheet. And what I used to do, because I was very, very bad at tracking my business mileage, is I actually used to use Google Maps. So I'd go back through my calendar and be like, okay, I drove to this client, and this client. And then I would know the round trip amount for my home. And then I would just put that in using Google Maps to calculate the miles. So that's a really quick and dirty way that you can catch up on your mileage tracking. So how do we make this less horrible next year? Or maybe you're like, it's not worth it this year, but I definitely want to do it for 2020. Use a mileage tracking app. There are these apps out there. They're amazing. They have a thing called drive detection, and they're going to detect when you drive. So you don't even need to turn them on. And then you just like swipe left and right to tell them if you drove for business or for personal. So I like Mile IQ. I think it's a great app if you are like using a spreadsheet or you don't have a digital accounting program. If you're using something like QuickBooks actually has its own built-in mileage tracking function in its app that comes with your subscription. So I would use whatever comes with your bookkeeping program first, because they'll keep everything in one place. But if you're like, I'm not using QuickBooks or anything like that, I'm just working in a spreadsheet, I need a better way, Mile IQ is my favorite mileage tracking app for that use case. Okay, step 4, home office. Now, I'm going to preface this by saying we're going to go over home office at a very high level because it's a lot to talk about. So I'm trying to give you like, here are the things you want to consider for your taxes. But again, like if you were to join my course, there would be a whole lesson that dives even deeper. So I apologize in advance that I can't go over through every nuance of home office because this is one that people love. So what makes a home office? What are the requirements? Well, the requirement is that you use it regularly, you use it exclusively, and it's your principal place of business. So regularly means that you use it consistently. You don't have to use it 9 to 5 every single day, but you also can't have somebody come over one time in your like entire year and be like, it's a home office. It has to be consistently used. Exclusively means that you are using it just for business purposes. So this is where people who are trying to write off like one part of their couch or like half of their dining room table get into trouble because it cannot be shared with other personal space. So I'm in my home office. It's a room. It's my office. I conduct work here. This is what we would consider exclusive space. And then principal place of business means it's where you are doing most of your administrative work. So it basically means like you can't have another office somewhere else where you basically go work 9 to 5, every day you do all your admin work. And then you're like, well, sometimes on Sundays I sit down at my laptop and do 2 hours of work. So it must be my principal place of business. You're actually doing the bulk of your work elsewhere. That doesn't mean if you're like seeing clients elsewhere, that's different, but we're talking about the administrative work. So this is one of my favorite charts. It's a flow chart from the IRS publication 587. You can just Google that. And this is a flow chart of how to tell if your space is a home office space. And I think this is probably the best way to go through and be like, okay, is this actually a legitimate home office space? It'll walk you through it'll walk you through how to figure that out. But if you do know that you have a legitimate home office, then this is how the deduction works. First, you're going to need the total square footage of your home, and then you're going to need the total square footage of your home office. So you do have to do some measuring. Then you'll divide your home office square footage by your total home square footage, and that becomes the deductible percentage. So for example, oops, sorry, I thought I had a slide there on that. So for example, if your office is 200 square feet and your home is 1,000 square feet, you will be able to write off 20% of the following expenses: rent, your utilities, so that's any utility, that's water, garbage, gas, electric, security, all that good stuff. Renters or homeowners insurance, repairs and maintenance to the home, and that includes cleaning, and then repairs and maintenance to the office. So as you can imagine, this can really, really add up, right? Because this is something that, like, especially if you live somewhere with a high cost of living and rent, it can be a pretty hefty deduction. So what you'll do is you'll total your home expenses for the year, and then you're going to multiply that by whatever your deductible percentage is, and that is going to be your home office deduction. So here's an example where it's 20. So somebody has $20,000 in home expenses for the year, which sounds like a lot, but again, if you're living somewhere really high cost of living, it's not. They're going to multiply it by 20%. That deduction is $4,000. If we pair that with the last deduction, the mileage, we've now have an additional $4,500 that we're writing off. It's good stuff over here. So how do you make next year less horrible? First, this is something I learned the hard way. Write down your square footages and keep it safe, because I used to like write it on a Post-it note and lose it. And every year I would have to remeasure my office and my home. So write it somewhere, keep it digitally somewhere. Don't do it once and that's it. 2, track your home expenses on a monthly basis. So what I really recommend is, like, you have some sort of spreadsheet, and just every month at the end of the month, you're shoving all of those home expenses in there. So it adds up over the year, because it's kind of a pain to go back and look at like every electric bill for the entire year when you're doing your taxes. There's already so much other stuff you have to do. So recommend doing this on a monthly basis. Okay. Step 5 is missed deduction. So this is where we're going to get every deduction we can. This looks like hunting for your business expenses in your personal account, because it happens, especially if you don't have very good boundaries and separation between your business and personal account. There is all sorts of stuff that you are going to find in that account. So these are the usual suspects. Amazon. All the time, because Amazon usually has your business and your personal credit card in. So often people realize there's a lot of Amazon that is going into their personal account and not their business account, and their business expenses. So Amazon, iTunes, because if you buy apps for your business, then you can write that off. But most people had an iTunes account before they had a business account, right? Because iTunes has been around for a while, so they still have their personal credit card linked. So that's one of the ones. And then Lyft and Uber. This is another one you can write off if you're using Lyft and Uber to like travel for business purposes, right? But again, in most cases, people have their personal card linked in there. And so they end up with a lot of Lyft and Uber that's deductible business expenses in their personal account. So these are the things you want to hunt through if you want to put in that extra effort and get those extra tax deductions. And really, this is a scan. So a lot of things that I'm telling you, these are not like I'm taking the ruler going line by line. Scan your personal bank and credit card statements for missed deductions. You know where you shop. You know what your local grocery store is called. You know what your favorite boutique is called. You're just scanning and just seeing, is there anything that I accidentally used this card for that I have not accounted for? And then you're going to add these deductions to your total business expenses, or just give them to your tax preparer as a list, and they can deal with it on your tax return. There's also something that are called split expenses. And these are expenses that are part business and part personal. The most common ones are going to be your personal cell phone bill and your personal home internet, okay? So the way these expenses work is that you can write off the business use percentage of your portion of the bill. Okay, so if you use your cell phone 50% of the time for business, you can write off 50% of that bill. If you are on a family plan with somebody and you write off and you use your cell phone 50% of the time for business, then you can write off 50% of your portion of that bill, right? Because you're taking 50% of what applies to you. So this is actually a really simple one to take. You're just going to total your portion of the bill and multiply that by the business use percentage. And the business use percentage is something that you are going to decide on your own. So you're actually going to make that decision, hopefully in integrity with what is true. You're going to say, okay, realistically, I use my phone 50% of business, or realistically, I use my home internet 60% because, I watch Netflix at night and stuff like that, or I have kids that are playing video games or whatever, right? You're going to be sort of figuring that out based on your own circumstances. And then you're going to add that to your total business expenses as telephone expense, and you can add it as internet expense under utilities. Okay. So the same applies for your home internet. So I'm going to go through these quickly because I don't think you need to hear me talk about it twice, but basically it's the same process. All you're doing is looking at your total home internet bill. You're deciding what is the business expense portion of that, and then you're multiplying 60% by your total home internet for the year and adding that to your total business expenses. So how do we make next year less horrible? Do the split expenses on a monthly basis. I think you're sensing a theme here, which is to try to build these into monthly processes, because trust me, like, we went through a lot of stuff. Imagine if you're looking at your home internet bill, your cell phone bill, your electric bill, your water bill, and your garbage bill, and you're trying to do a look back for 12 months for all of those bills. That's a lot of work, right? That is so much work. So instead, reduce the work into manageable chunks and do this on a monthly basis. You also want to review your personal statements at the end of every month. So again, these are scans. We are not going line by line. Just open up your bank account. Maybe you're like waiting at the doctor's office. Maybe you're like in like a Lyft. Maybe you're on public transportation. Just open it up and scan through, and it's like, okay, is there anything on here that should be business? Nope. Okay, we're good. Yep. Okay, I need to write that down. It shouldn't take you very long, especially if you're doing this on a monthly basis. And then you want to make your cart, if you're finding that there's a lot of issues with like Amazon, Lyft, and iTunes, and you're like, this is getting really messy, I would recommend making your biz card the default card, because it's easier to call it an owner draw in your accounting than it is to put it back into your business accounting. So if this is like a constant issue with you, if this is becoming a lot of work, that's going to be the easy solve. All right, so should you hire someone or DIY your taxes, right? How exactly should you handle your taxes? Let's talk a little bit about who DIYing is a better choice for. I think people who are sole proprietors and single member LLCs in general are able to DIY their taxes. Service-based businesses with basic income and expense structures. So coaches, consultants, even like designers, people that we kind of consider in like the knowledge working space, where you're like, I'm billing you for my time, and then I pay for some expenses. And they're very, very simple business structures in terms of like the way your revenue flows into your business, can generally DIY as well. New businesses that have minimal income and expenses. So if your business is just getting off the ground, you maybe didn't make that much money, and you don't even have that much going on, you're like, yeah, I was kind of, or you started it in the later half of last year, that's generally a good candidate for DIYing. And businesses without big fluctuations year to year, because there's also folks that have been in business for like 5 years and they're like, I always DIY my taxes and it's always kind of the same. Like I make about the same, I spend about the same. There's not really any fluctuations. Those are all good candidates for DIYing. Now let's talk a little bit about who should hire. Businesses with unusual expenses. So if you're a business that has like really different expenses or expenses that you have a lot of questions about, you want to hire somebody because you're going to need that advice. Sorry, all my product-based businesses or retail shops, but if you have inventory, how you take your inventory on your taxes, there's different ways to do it. There's different ways to value your inventory. You're going to really want to have somebody who can give you tax advice about the right way to do that. I generally think people with product-based businesses should be hiring someone because they're going to help you figure out the best way to manage that side of your business from a tax perspective. Also, scaling businesses that need tax advice. So scaling does not mean last year you made $60,000 in profit and this year you made 75. Scaling means last year you made $60,000 in profit and this year you made $300,000 in profit. And there is a huge difference in your tax strategy at that point. So one thing to keep in mind is that your tax strategy is going to evolve with your business. So don't just think this is the way I do my taxes, is the way I'm always going to do my taxes. As you make more money, you will change the way that you want to be taxed. That's just the reality, is that you don't want to just stick with the same tax strategy forever. So if you have scaled significantly, then it's a good time to hire somebody because quite honestly, they're going to give you advice on what you should do about your tax strategy, and probably what they'll save you will outweigh their cost. And then S Corp and C Corp owners. So we didn't talk a lot about C Corps other than, they have to pay taxes on their profit at a corporate level. But S Corps and C Corps have more complicated taxes. There's different tax rules than a sole proprietor, a single member LLC. Both of them require corporate returns. So then you're getting into multiple tax returns. There's just a lot going on there. And with S Corps, there's some things that you need to do in order to follow the rules of S Corp taxation. So you really want to hire somebody who's going to ensure that you're staying compliant and who's going to take on filing those additional like business tax returns for you. So here are the things to consider when you're DIYing. Time. What's the value of your time, right? Like, how long is it going to take you to do your own taxes versus what could you do with that if you were putting that into billable time? What's the ROI on your time? So this is that same question, like, should I spend 10 hours dealing with my taxes, or do I have a waiting list of clients and I could actually spend that 10 hours making like many thousands of dollars, where I could just pay someone $400 to do my taxes? It's sort of like the ROI is much higher to hire somebody. The cost. Will you save money by hiring? So do you think this tax person is going to be able to save you money in tax deductions or answering your questions or scaling your tax strategy, right? Because again, what you pay them may be offset by what you save in your taxes. You want to consider compliance. Do you know tax laws well enough to DIY? Like, are you really clear on your tax deductions? If you're not, or you're like very like, I'm totally lost, you may just want to hire somebody who can help you. Will you get it done on your own time? This is a big one. A lot of people think they're going to DIY. They put it off. They get too busy, blah, blah, blah. They file extensions and all of a sudden it's October and it's time for their taxes to be due. So you do want to consider, like, will hiring somebody keep you accountable to filing your taxes on time? And then you want to consider your emotional health, right? So is this going to alleviate the emotional stress and worry that DIYing may cause you? And then you want to really think about, how do you feel about DIYing? Like, some people love it. They think it's so fun. It's very exciting. It's a challenge they want to solve. Cool. DIYing is a good fit. Some people are probably like right now being like, I cannot do that. Like, I'm so stressed out about thinking about it. It may not be a good fit for you to DIY. So what are the different types of preparers that you can work with? Well, first there's a CPA/accountant. People use them interchangeably. CPAs and accountants are people who have passed an accountancy exam and they've gone to school for accounting. Then there's an enrolled agent. So an enrolled agent is not a CPA or an accountant. There's somebody who has passed the certification by the IRS that allows them to file taxes on other people's behalf. So an enrolled agent is going to be able to give you really good, they're going to be able to do your taxes for you. You know, they know they pass an exam by the IRS, but unlike a CPA and accountant who's going to be able to give you like a wider view of your finances, and enrolled agents like really focused on the tax side of things. Generally, they're less expensive than a CPA, but obviously it's because you're only being hyper focused on your on the tax side of filing your taxes. And then there's the individual, because honestly, you can quite honestly like hire like just whoever, like anyone can file taxes for anybody. Like it's like I could file your taxes for you. I don't want to. No, please don't ask me to, but I'm not an enrolled agent or a CPA, but I could file your taxes. Like someone else can help you with your taxes. You know, your uncle can file your taxes for you. So there's also that, and that is an option. But of course, we probably want us to move more in the direction of a CPA or an enrolled agent because they're going to keep you more compliant. In terms of finding a preparer, the best things you can do is start by asking others in your industry, because you really want to find somebody who is very clear on what your industry is. So if you work at a restaurant, that industry is very different than if you work in fashion design, right? Or if you work as a coach, that's really different than a boutique owner. So looking for people in your industry and asking others in your industry are going to help you find a preparer that's really clear on sort of like the nuances of your tax situation. If you don't know anybody in your industry and you're like, well, I asked, nobody can really recommend somebody, then you want to ask other self-employed business owners. There's actually a lot of great tax preparers out there that are really good at personal taxes, and they're not so good at self-employed taxes. So you want to find somebody who is at least a little bit clear on self-employed taxes. And if you still can't find anybody, you're like, I asked all my self-employed friends, nobody knows, then go into Facebook groups and community forums, because honestly, those groups, like if people like their tax person, they're going to like shout it from the rooftop. Like people, when they love their tax person, they just want to talk about their tax person. So that's another really good avenue for you to be able to find somebody. Okay, so I am going to stop here. I'm actually going to stop screen sharing, and I know Carly Ann is going to come back on, and then we will go back through the Q&A.
All right. Awesome stuff. Thank you, Andi. All right, everyone. So before Andi jumps into Q&A, just wanted to pop on and thank you all for coming. And as promised, to share the information about the offer for the course. So if you look in the chat, we'll drop a link to our course page. And also the code is taxes, so TAXES. So if you apply that code to Andi's How to Manage Your Money and Create a Budget on-demand course, you'll receive 40% off. And this offer will last through, well, it ends on Saturday, April 19th at 11:59 p.m. So again, the code is taxes, TAXES, and it applies to Andi's How to Manage Your Money and Create a Budget on-demand course. All right, so on that note, I will hand it back over to Andi so she can answer all of your questions.
Awesome, thank you so much. Yes, I'd love to.
Sorry, again, just a reminder, any additional questions, put them in that Q&A box, but also don't forget to upvote questions that you also might be curious of knowing the answer to that you might not have submitted yourself. So click the like function underneath the questions that you want to upvote. All right, that's it.
Okay, awesome. Thank you so much for that reminder. Thanks so much for putting your questions in the Q&A box. So let's get through these. And just, yeah, I definitely, if this was interesting for you, or if you like wanted to go like way deeper, that the course is going to do that. And we cover so much more than taxes. There's just one module on taxes. I mean, we're talking about like everything to do with business finance, budgeting, owner pay, forecasting, using reports, setting up your money, bookkeeping, all that good stuff. Okay, so A. Cameron asks, how far back can you claim deductions for necessary items? If you start buying supplies but don't actually start your business until a year or 5 years later, can you retroactively count these items? So if you started, if let's say you started buying stuff for like a business that you were starting this year, but you're, or yeah, this year, 2022, at the end of last year, there are ways and use cases for you to be able to write those things off, but you're definitely going to need to talk to a tax preparer about that, because there are different ways that it can be taken, and it's going to depend on like how much expenses you had, and you know, like the actual like amount that you're trying to write off. In terms of 5 years later, you're gonna have to really show that for 5 years you were doing business activities, and it's going to be tough. So you can't say, oh, 5 years ago I bought this thing that I'm now using for this business that I started now. It doesn't quite work like that, because at that point you didn't really have like you weren't showing that you were trying to build a business. Okay. Anonymous asks, I made money for the first time last year and I have an LLC. Can I just report my earnings as personal income? My spouse and I filed jointly and I wasn't sure if I needed to do something different. Trying to decide whether it's worth to pay an accountant $400 to file taxes. I only made $12K last year. So basically, if you have an LLC and you received income from it, you're going to have what we call self-employed income, and you will have to fill out a Schedule C on your taxes. So you can't just be like, yeah, sure, this is just part of all this money, right? You will have to file a Schedule C, which is where you report your self-employment income. So it's up to you if you want to take that on personally or have a tax preparer do it. It's not a super hard form to fill out, but you will have to fill it out. Like you can't just kind of shove it into like a W-2. But if you're using something like TurboTax, for example, and you say that you have self-employed income, they're going to walk you through how to do the Schedule C. Like they're going to ask you basically all the questions that would be on a Schedule C and then fill that out for you. So it is possible to DIY it. It's just more like you have to decide if it's worth it to you or not. I always thought I couldn't count deductions unless I itemized, and I couldn't itemize unless I had deductions over a certain amount. Is this not true? So there are two types of deductions that we're talking about. So when we talk about our tax deductions with our self-employment income or businesses, those are different deductions than our personal deductions that we itemize. So when I was talking about your tax deductions, I was really speaking to the business expenses that you have in your self-employed business. What you're talking about, which is personal itemized deductions, is different. So you can 100%, if you are self-employed, count your tax deductions. That is the right that you have as a self-employed person. Your personal deductions, which is either you take the standard deduction, which I mentioned everyone gets if you just kind of exist as a person, versus itemizing your deductions. That has to do with your personal expenses. That's going to be things like if you have medical expenses, if you have like your mortgage interest, what are some other things that people, your charitable contributions. And the amount thing actually has more to do, like if you itemize your personal deductions, is it more or less than the standard deduction? Because if it's less, it's not really worth doing. And if it's more, obviously you get a better break on your taxes, so it's worth doing. Hi, Gabby. I'm doing a startup business and I never filed any taxes on my business. Would I only be able to file taxes if I have an LLC? And if I don't have one, how would I go about filing, since I have documents and services of things I paid for my startup business? So Gabby, you do not need to have an LLC to file taxes for your self-employed business. You are what we call a sole proprietorship. So when you have self-employment income, you are by default, you become a sole proprietorship. And basically that means that you are going to be taxed as a sole proprietor by the IRS, but you have not formally organized your business under the state you live in. And that's what we're talking about when we say you're an LLC. When you're an LLC, you have gone up to your state and you've been like, I am organizing myself as this business structure and under the rules of whatever state you live in's LLC rules. So you don't have to be an LLC to be a self-employed business owner. You're just by default going to be a sole proprietor. The interesting thing about an LLC and a sole proprietorship is they actually have the same tax structure. So if you're a sole proprietor or a single member LLC, how your tax is exactly the same. The only difference is if you were to file for like an S election and change your tax structure. But generally speaking, when you are a sole proprietorship, you're taxed the same way at a federal level as an LLC. So you both, like LLC sole prop, you're still going to file that Schedule C that I mentioned earlier in order to report your self-employed earnings and your self-employed expenses. So if you do want to be an LLC, so because the second half of your question is how would I go about filing? If you do want to be an LLC, then you'll have to file you'll have to go to your state, and usually this is the Secretary of State, and you'll have to file that way. Now every state has different filing requirements, what they want, what they need, the cost, the timeline. So I can't say exactly like what it would look like for you, but what you can do is you'll Google your state's name and Secretary of State, start LLC, and it'll take you, I'm sure, to a page that outlines how you're going to formally organize your business under your state. Adna, hi, I know you mentioned product-based businesses should have an accountant, but what if you are a service-based business that sells a tangible product? For example, I'm a wedding florist that sells my design service inclusive of design, installation, and flowers. I've used an accountant in the past, but was considering DIYing this year. Yeah, so this is an interesting question because I think that if it has pretty minimal tangible goods, you can definitely DIY. And what I've seen people do to be creative and save money in the past is like hire an accountant for the first couple years of their business and then use their prior year tax returns as like templates. So basically being like, okay, this is how my accountant was like handling these expenses. So I'm just going to replicate that on my taxes. So I think in your case, because you're not like a retail space, and you're also not somebody that's going to have a lot of like inventory tied up in COGS and like raw materials, it's probably fine for you to DIY, especially if you've used an accountant in the past and you're really clear on how to handle the inventory side of your business. And you may not even have inventory. This may be the other aspect of it. You're like, I actually don't have inventory. Like I just sell stuff when I'm doing, the installation, and then, I buy it, mark it up, sell it, and that's it. In that case, yeah, I think DIYing would be fine. What do I do with the W-9 that I was issued? So with the W-9, you were issued, oops, sorry, something got upvoted, but I'm just gonna keep going. Okay, so with the W-9 that you were issued, you are going to, well, okay, sort of depends. If you have other income, you're just gonna like roll that into your other income. So for example, let's say that you have $20,000 in revenue from your business and you got issued a W-9 for $2,000. You're going to, and that $2,000 is included in that $20,000 total. So you've basically added up everything everyone paid you, someone gave you a W-9, you're just gonna report that $20,000. The main thing is that you are reporting the same amount or more than you get issued as a W-9. Because if you had $20,000 in your business and you got W-9 for that, your 1099 for that, and you have you only reported 2,000, that's the problem. The IRS wants to make sure that you're reporting your self-employed income, and that's why they send you the 1099. But if you have all sorts of other things that you got paid for that are in addition to that 1099 that you received, then all you're going to do is report all of your income, and that should include what you got 1099 for. So kind of like TLDR, you don't want to ever report less self-employment income than the total of your 1099s, because the IRS is going to be like, all these people said they paid you this amount and you're saying they paid you less, there's something up. So you always want to make sure that it's more, and if it's more, just report all of your self-employment income. Monica, if you don't have a car and use public transportation. So if you use public transportation, you're not commuting, so you're, public transportation to the post office, the bank, blah, blah, blah. then you can write that off. One of the things that I recommend people do, if your public transportation agency has like a Clipper, like a card or like a pass, usually like we have Clipper cards. They're basically cards with money on it. You put it in the thing. If you have something akin to that, you can have 2 of those. You can do one for business, one for personal, and then you can just have it refill from your business account. So it's really easy to keep track of how much actually went into business public transportation versus like trying to pay in cash and track that. Where can we find the top 20, 50, 100 most common write-offs specific to our own vertical? Is there a book or online blog you think details this fairly well? I would say Google tax deductions industry, tax deductions florist. Somebody has written about it. I feel relatively certain, unless you're in a very niched industry, just Google it. There's no one place that has it all. So there's not like one specific place that's going to be like, here is every tax deduction for every vertical. There's nothing like that, because usually people are like writing in their niche about these things. Okay, Tiffany asks if you and someone else share a home office, and by that I mean both of you only use that office as a home office, would it count as exclusive use for both of you? Yeah, so you'll just basically, it sounds like this person is also self-employed, so you're probably going to have 2 Schedule Cs. You're just going to end up splitting the home office. So like your square footage will be your square footage and their square footage will be their square footage. My wife and I actually did that because my wife is a massage therapist, and we stored like the closet of my old home office was like all her massage stuff. So we basically like took that portion square footage wise on her Schedule C, and then the rest of it I took on my Schedule C. The thing is, you can't double count. So you can't both take the full square footage. You have to take your portion. Okay, Rebecca, my home office is a portion of my bedroom in my NYC apartment. Calculating total home square footage, do I measure the whole apartment that I share with a roommate or just my bedroom? That's a good question. I would probably, what I would do for this one is I would measure the whole square footage, and I would divide it by half, because really like kind of like half of it is your roommates, and then do that, because home office is also like, it's the total home. So you still need to get a percentage. Yeah, that's my answer on that one. If we live in New York and are considering incorporating in Delaware, does it make sense to hire someone who lives in our state and knows NY laws, or to hire someone who from the state the business is incorporated in that we wouldn't be able to meet physically but has good reviews? This is a good question, and I would say ideally somebody who does both. I would think that if you are incorporating in Delaware and New York, you probably can find somebody who knows New York state laws and about incorporating in Delaware, because that's pretty common. That would be who I would look for, because the thing is that you have to be sure that you are, like, if you owe like income taxes in New York, you want to make sure your tax preparer knows how to do New York state income taxes, right? So you want to be sure that you can do both. I would say if you can find somebody that knows the laws, and maybe this person who's from the state your business is incorporated actually does, because there's probably this use case a lot, but you really want to look for somebody who can do both. The webinar recording will be available afterwards. Is there a sample bookkeeping sheet that we could use, or a template? I think that you are asking about, I'm just gonna look for something that I can send you. Sorry, I'm trying to pull up the link. I think you're asking, is there something that you can use as like for bookkeeping? I can find the link for you. I don't know why it's not. Did I spell it wrong? Yeah, we may need to follow up with this when, yeah, we may need to follow up with this. I have a link to one, but I can't pull it up right now. So let's follow up. Well, let me see if this link works. Okay, I'm going to follow up on this because I can't pull it up right now. What are the most commonly missed tax deductions you see over and over? I constantly see cell phone and home internet missed, like transportation, like Lyft and Uber and that type of stuff when you're traveling for business. And then I would say like professional development stuff, and professional development is a tricky one because it really has to do with your industry. So like what's professional development for one industry is not professional development for another industry. And I think that's why it gets missed, because it's so nuanced. So it's like, that's another thing when you start Googling like your industry's tax deductions, you'll start to figure out like what's actually professional development for your specific industry. How should we handle depreciable expense items like computers and other things that you use for your business? Well, Tyler, it's really going to depend on the cost of those items. If it's under $2,500, I wouldn't even bother depreciating it, because it doesn't really help you in the long run, because what you get over the course of 5 years versus that what it'll do for your taxes in the year that you purchase it, it just like doesn't really match up. So generally, if it's like under $2,500, like don't depreciate it, just expense it. Now, sometimes if it's over $2,500, you also may not want to depreciate it. It's actually more of a tax strategy, and there are safe harbors that allow you not to depreciate and take something as an asset. So I would say talk to your tax person about what's the best strategy for your taxes in the tax year you're in, because honestly, a lot of times those decisions are made on like a what's going to be best for you basis versus like this is what everyone should do. Anonymous, any tips for managing sales tax? How does this tie into our total tie in, or is this totally separate? It is totally separate, because sales tax is not something that you're taxed on like at the federal level. It's something that you're like collecting on behalf of your state. Sales tax is quite complicated, especially if you have an online store. There's a lot of rules, state by state rules, that have to do with what we call nexus. And nexus basically means like, are you required to collect sales tax in the state you live in? The best resource that I can recommend for you in figuring out sales tax, because we just can't, do that right now. That's like a whole nother webinar. Like I could spend another hour talking about sales tax, is TaxJar. TaxJar is going to help you. TaxJar is a great resource for sales tax and like state by state rules, how to determine if you have nexus, tracking sales tax. It's my favorite sales tax resource. Is it true that for any payment below $500, there is no need for a 1099 or a W-9 to be issued? That is true. Someone pays you under $600. So $599 and below, they are not required to issue a 1099, but you are still required to self-report that income. So just because you didn't receive a 1099 for it does not mean that you are not expected by the government to report it on your taxes. Monica, for home expenses, if you live with a family and a shared home. So again, you're measuring your space, you're measuring your home office, and then you're taking the percentage of the business, you're just taking the percentage of the bill, even if it's shared with somebody else, right? Because it's doesn't make any sense to try to require this only for people who live in single households, right? So you're still measuring everything, and then I think the logic behind it is if you live with, 4 other people and your family, and there's more bedrooms, there's more square footage that is dedicated to personal. So you're still only writing off the correct percentage, because that will like reflect on like things like the utility bill. Anonymous, I was planning to form and operate as a benefit LLC, which is a new kind of business entity, just a few years old and only in certain states. Are there directories online that tax preparers list their specialties? I did a general search and asked around and have run dry. So I know what B Corp benefit LLCs are. I would really look for somebody, one in your state. I don't think that I'm trying to think of like somewhere where there's a directory for that. There is like, this is slightly different, but like the people who certified B Corps, they may have a directory, or they may be a good resource. So like, I don't remember what it's called. So these are like things, but there is a group. B Corporation.net. They're the ones that certify B Corps. Here, I'll put the link in the chat. They may have some resources because you're kind of getting into that territory. And so they may have like a resource list of accountants and stuff that are familiar with this type of structure. I've been using TurboTax for years for my self-employment. They're no longer on IRS free file. Any recommendation on tax software similar to TurboTax? There's Tax Act is one of them. Yeah. And then actually, let me see. Yeah, I think Tax Act is the other really well-known one. I'm just looking really quickly. Sorry, when I'm saying like, hang on, I'm looking, I'm actually trying to find like resources. If I can find them quickly, I'm trying to find resources to put into the chat for you all. So I'm, you know, not just looking at my phone or something. Yeah, I would look into Tax Act. Is it possible to turn on audio captions? Unfortunately, this isn't something that I like control on here. So I'm sorry if we weren't able to do that for you. Yeah. How much of my rent can I deduct as office space? Is there a formula? What mistakes should I avoid? I believe we answered that live. We went over that in the webinar. Can EIC be claimed by non-citizen general, non-green card holders? I don't know. You'll have to talk to your tax person about that because that gets into personal taxes. And that is not something that I am a specialist in. How does Wave Apps compare to QuickBooks in terms of total functionality, integrations with PayPal, Zelle, Venmo, etc.? So Wave Apps is really great because it's free. I would say it's really gonna, I have found that Wave Apps works best for people who are service-based businesses who have more like more simplified business structures. I have never met anybody with an inventory-based business that has been happy with Wave Apps because it is the functionality is not as robust as something like QuickBooks. So you want to keep that in mind. QuickBooks does have an integration with PayPal and Venmo. I believe Wave Apps also has an integration with PayPal. I don't know about Venmo. And Zelle is just bank to bank. So like that's just going to come in through your bank. So there wouldn't be an integration for either of those. I would say like really to compare the two, the easiest thing you can do is QuickBooks has free trials. So I would just do, I mean, Wave is free. You don't need to do a free trial for it. You can just do it. And QuickBooks is has a free trial. So just try them both. You know, pop in one day, test one out, play around, test the other one out and see if which one meets your needs and you like better. For split bills, do I use a personal card or business card? I use QuickBooks and want the easiest process for this. The easiest process is going to be to use your business card and you do in QuickBooks what's called a split expense. And then if let's just pretend we're doing 50-50, you're going to take 50 as a category of like telephone expense and 50 as an owner draw. That would be the easiest way because you wouldn't have to be putting information back into QuickBooks. How about HSA? Good idea. That is an entirely different webinar. HSA is a health savings account. There's way too many factors to be able to answer that question right now on this webinar. Do you apply the same advice or on hire versus DIY for bookkeeping and accountant, or is it just for an accountant? I would say like it's pretty similar, especially the things about like time, ROI on time and stuff like that. I think at that point, you really just, it's a little bit different from the like, if you're this, if you're that, but I think the questions that I posed that you should ask yourself are the same, because if you're doing bookkeeping, let's say you're a product-based business, but your products are like at a really high price point. So you don't have as much like product sales, but you know, like, so you have less transactions to deal with, then maybe it's like pretty easy for you. But you can be a product-based business with, you know, you're selling 100 units a day. That's going to be a lot of transactions. So you kind of want to come back to that idea of like, what's my time worth? What's the ROI on the cost? You know, how does it make me feel? Do I think I'm doing this correctly, right? The compliance side, or am I messing this up? You can still come back to those questions. Can you include car care maintenance and repairs I think this is car maintenance and repairs in your deductions if you're traveling, driving a lot for business. So this is a different way of writing off your car that we didn't talk about. We do go into it in the course, and it's called the actual cost method. And this is where you're gonna it's kind of like home office. You're basically gonna take how many miles you drive for business versus personal, and then take a percentage. So let's say you drive 10% of the time for business versus personal, then you're going to take 10% of all your car expenses. So that's going to be care and maintenance. That's going to be gas. That's going to be your insurance. If you lease a car, your lease, car washes, things like that, registration, all that good stuff. That's a different way of writing off your car. And that really only works for people who drive a lot. And if you do drive a lot, it's great. But like I have found that when I do these a lot of times people aren't really driving that much because they're more like home-based businesses or working out of like spaces close to them. But if you're somebody that drives a lot, you drive to a lot of job sites or things like that, or maybe you do installations and you always are driving around, you definitely want to consider that because it can give you a pretty good deduction. What is the best organization methods I can use to keep tabs on all the expenses you mentioned? I would say a digital accounting program would be Gold Star. That can be Wave apps, which we've talked about, or QuickBooks, or Xero, and Xero spelled Xero. That's going to be, I would say that would be the Gold Star because there's so much automation that you can do with those, and they can really save a lot of time. There's a little bit more of a learning curve than something like a spreadsheet, but it will help you. If you invest that time now, as your business grows and you have more transactions, you'll be really happy that you have something that you can automate. Can you elaborate on living and working in different states, long-term travel, remote work? I can't, because these are questions that have to do with your personal taxes, and like if you need to file like income tax in multiple states, if you have to file, this is really at this point not happening on the business tax side of things. We're really getting into like personal taxes. Can you explain nexus? So when I say nexus, it's pertaining to sales tax, and it has to do with, so nexus is just a fancy way of summarizing the question, are you required to pay sales tax in this state? And they call it, do you have nexus? But there's all different ways that you could be required to pay sales tax in a state. So sometimes if your inventory is housed in a state, or if you make a certain amount of sales in a state, which we call economic nexus, right? So every state has different rules around what counts. And there's 50 states, all with different rules, which is why I was like, go to TaxJar, because you can actually look state by state and figure it out. And if you're worried about sales tax requirements, if you are like, oh my gosh, I think I actually pay attention to this, maybe you sell on Amazon or you have an online store, sales tax or sales tax jar, the product itself, which I love and recommend for people with sales tax requirements, will track when you hit nexus in different states based on those state requirements. So you don't need to like track that and know all the laws if you use a product like TaxJar. For a product-based business, if we are located in the USA, do we tax people who live overseas who buy our products? This is going to be complicated because it's going to depend on where they live. So tax is this is not the federal government mandating that you tax them. This is actually the government of where they live mandating that you tax them. So again, you're going to need to, all right, I see an addition here. So again, you're going to need to really know the laws in that country. So doing contract work for a client in the UK is there anything you need to watch out for with tax reporting when receiving income from a non-USA client? Doing contract work for a client in the UK, for example. You just want to be sure that you're reporting it. I think a lot of people think if they're working for people internationally that they don't need to worry about it. Just be sure that you're reporting it on your income. For product-based businesses, if we're located in the US, okay, I answered this question. It's unfortunately, you're going to need to know like tax, you're going to need to know the countries that you're selling to, and what their sales tax requirements are. That's the unfortunate answer. And this is why I was saying, like, product-based businesses and businesses with sales tax often benefit from a tax person, because it gets complicated really, really quickly. Rebecca, any recommendations on whether TaxAct or TaxSlayer is better for self-employed people? I can't really say, because I'm not super familiar with either of these. I would say, honestly, like, just type in TaxAct reviews, TaxSlayer reviews, read some reviews, see what the pros and cons are. And don't just take because there's cons to mean it's not a good fit for you. Because if, like, let's say you're a service-based business and they're like, such and such software isn't good for products. Well, it doesn't really matter for you, right? But if you're a product-based business, it does. So just be sure when you're reading reviews of things that you, like, look at the cons in, like, the context of your situation, because there could be cons that you're like, that actually isn't going to impact me at all. How do you track walking for deductions instead of mileage? Unfortunately, you can't. You can't write off your feet. I wish you could. Maybe that's a pitch we'll make to the IRS this year. Okay, I think we answered everything. There's 35 questions and only 37 of you left. So I hope everyone got at least one question answered. Thank you all so much. I'm going to hand it back to Carly Ann.
Thank you so much, Andi. This was great. Lots of information. Hope everyone is ready to go prepare their taxes and get all of their deductions in. All right, so everyone, again, just a reminder, look in the chat, we'll drop it in again, a link to our course page where you can use the code TAXES to get 40% off of Andi's How to Manage Your Money and Create a Budget course. Again, as mentioned, there's a section that talks about taxes, but the overall course is all about, you know, how to manage your finances. So thank you again, Andi, for joining us tonight. We appreciate you, and we'll see you all at our future Parsons Entrepreneur Academy events. Join our network and stay tuned for future announcements of other events we have coming up. All right, thank you everyone. Bye, Andi. Bye, everyone.